traditional tax prep. This is Green Lights, the Physician's Tax Show, unlocking the legislative incentives of the tax code.
If you are like most high-earning physicians, independent 1099 contractors, or private practice owners, you probably feel like you are playing a defensive game against the IRS. You get a massive tax bill at the end of the year, you call your accountant, and they tell you, well, you made a lot of money, so you have to pay a lot of taxes. There's nothing we can do. I'm here to tell you that is a reactive, backward-looking lie. The US tax code is not a brick wall designed to stop you from building wealth. It is a 70,000-page roadmap of green, yellow, and red lights. 99% of the tax code is made of green lights. Legislative incentives written directly by Congress to encourage you to invest in your business, hire employees, and drive the economy. In this inaugural season, the Physician's Tax Playbook, we are going to explore a fundamental, liberating truth. It is actually far easier to follow the tax laws built in, legal rules to preserve your wealth than it is to blindly overpay or risk pushing unsafe boundaries. We are going to legally unlock everyday write-offs, optimize your corporate entities, and build advanced wealth preservation engines. No gray areas. Just offensive tax planning that puts your hard-earned clinical wealth back where it belongs, in your pocket. Again, welcome to Green Lights. Let's start the show. Welcome to episode 1 of Green Lights. Today, we are breaking down one of the most frequently missed, misunderstood, and underutilized deductions for medical professionals, the home office hack. If you are a hospitalist, an anesthesiologist, a locum doctor, or an independent consultant, your traditional CPA has probably told you, you can't claim a home office. You perform your actual clinical work inside a hospital or clinic, not at home. Claiming this will trigger an audit. That advice is completely incorrect, and it is costing you thousands of dollars in lost mileage write-offs every single year. Let's look at the actual tax law. Under Section 280A of the Internal Revenue Code, you do not need to see a single patient at home to claim a home office. The law states that your home office qualifies as your principal place of business if you use it regularly and exclusively to conduct administrative or management activities for your medical practice. Are you doing your charting at home? Are you handling your billing, managing your schedule, reviewing contract terms, or working on your business marketing? If you do those administrative tasks in a dedicated space in your home, that space is legally your home office. And once you establish that home office, a beautiful tax shift occurs. Every single mile you drive from your home to the clinic, hospital, or surgery center is no longer a non-deductible commute. It is now a 100% tax-deductible business trip. Now, how do we claim this safely without raising red flags? Most accountants don't know how to make sure you get the best calculation. They use the simplified method, which caps your deduction at a measly $1,500, or they guess a flat percentage, which looks like a red light to the IRS. Let me make it fairly simple. The common space subtraction method. First, you start with your total square footage, but you subtract the common space from that. Things like your hallways, your dining room, your kitchen, your living room, and your den. All of those things are shared by the office as well as you as the homeowner. You shouldn't be penalized by having to include that common space in the denominator of your calculation fraction. Let's run the math. Suppose your home is 3,000 square feet in total. If you have a dedicated office that is 300 square feet, a lazy accountant will tell you that your home office footprint is exactly 300 square feet over 3,000 square feet, which equals 10%. But if we subtract your shared kitchen, hallways, living room, and den, which account for, say, 1,000 square feet, the active personal living space of your home is actually 2,000 square feet. That becomes our denominator. Denominator equals 3,000 square feet minus 1,000 square feet equals 2,000 square feet. Now for the numerator, we take your dedicated 300 square feet office. But here's the secret trick. If you have a business vehicle, which almost all of you would if you have 1099 income, you also include the square footage of your garage along with your home office. If you have a 2-car garage, which is typically about 400 square feet, and you park your business vehicle in it, at least half of that garage square footage, so 200 square feet, is included in your numerator. Numerator equals 300 square feet office plus 200 square feet, which is half of the garage equals 500 square feet. Now let's divide that numerator by our subtracted denominator. Your legal, audit-proof home office deduction jumps to 500 square feet over 2,000 square feet equals 25%. That is a 150% increase in your home office footprint. This means you can write off 25% of your rent or mortgage interest, 25% of your home utilities, 25% of your internet, and 25% of your home insurance. This results in a much higher, more significant fraction to multiply all your home expenses by. When you combine that with writing off every mile you drive to the hospital at 72.5 cents per mile, you are turning a simple administrative desk into a massive tax shield. Remember, Congress wrote these rules because they want business owners to have dedicated workspaces. It is actually far easier and safer to follow the tax code's exact guidelines and keep a clean log of your home administrative hours than it is to blindly overpay the IRS. Stop playing defense. Set up your administrative headquarters at home, run the math correctly, and turn those daily commutes into pristine tax deductions. To draft your personalized, proactive tax blueprint, visit us at Physician Tax Solutions and schedule your strategic consult. I'm Jeff, keep the lights green, and see you in the next episode.
The information provided in green lights, the Physician's Tax Show, including all associated media, is for general educational and informational purposes only. It does not constitute formal tax, legal, financial, or investment advice. Tax laws, including Section 280A and other provisions of the Internal Revenue Code, are highly complex and subject to change. Transmission of this information does not create a CPA client, attorney-client, or advisory relationship between the listener and Physician Tax Solutions, or Provident CPAs, PLC. Before implementing any strategies discussed on this show, always consult with your own qualified, licensed tax professional or legal counsel to evaluate your unique financial situation.